Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about how to screen for good deals in the stock market. So if you've been following stocks lately, you can obviously see right here to the side that it has not been too kind to us. You can see Nvidia down almost 7%. Big names, Apple, Microsoft, Google, Amazon, Tesla, all down 2 to 5%. Berkshire Hathaway down, 0.8. That's the hedge, essentially. But we see a whole bunch of tech stocks getting crushed, bank stocks are getting crushed. We're going to be looking for good deals in the market today so we can buy and hope for a rebound sooner than later, right? Because the risky stocks that you buy here at these prices are going to be the best returns overall, but you don't want the stock to go bankrupt, right? Because that's what risky stocks do. They could go bankrupt. You want to make sure your company is financially safe and legit making money, right? They're profitable in hopes that they will survive this pandemic and make it out with some good gains on your end. So let's screen for stocks. I'm using finviz.com, and you can just press on screener or /screener. And right away, I'm going to be using country, USA only. This just makes it easier to find stuff that I could relate to and financial reports that I can understand. Then we have market cap over 10 billion. You could do over 2 billion. Let's actually just do that, over 2 billion. Forward P under 20, which means forward earnings under 20, which is price over earnings. And then PEG is just the PE ratio combined with growth, right? So it's one metric, and under one is good, right? One is fair, over one is overvalued, under one is undervalued. We're going to go under one. Now we want the EPS growth this year to be positive, right? We want them to grow their earnings this year. EPS growth next year to be positive as well. And then over the next 5 years, we want to see a 20% average return, which is pretty dang high, right? We just cut our criteria in half from 150 to 76, our output. We can see right here, you could get a summary, long-term annual growth estimate over the next 5 years, over 20%. That's what we're aiming for. And then finally, the quick ratio and current ratio, they measure almost the same thing. We could see indicator of a company's short-term liquidity. It basically tells us, are they able to meet their loans coming up with cash, and that's a quick ratio, and the current ratio puts inventory in there and current assets. So that's less liquid. Quick ratio is more liquid, so it's kind of more harder to pass in terms of what do you want? You want over one. Over one is good, under one is bad, essentially. And then we have our companies, right? So we have 40. 40 is not too bad. We have 2 tabs to look through, but all these companies are, number one, in the US, number 2, over $2 billion in market cap, and they meet all this criteria above. So under 20 PE ratio means they're fairly undervalued. PEG under 1 by definition means they're undervalued. Grew earnings this year and can grow 20% over the next 5 years, and obviously gonna grow next year if it's over 20% in the next 5 years. Market cap over 2 billion, and then quick ratio over 1, so they are liquid and can pay off their short-term debt. Now let's look through these companies. Let's get on the technical side. Or actually, what do you do? Charts. Basic. Yeah, this is what we want. So we get a good glimpse of the company. So Facebook is number 1. Facebook may be one of the best deals out there right now. Look at the numbers, and you could start drooling, right? $500 billion market cap, pretty dang high. Although we want to look at why it's a $500 billion company, not necessarily is $500 billion too high, right? There's at one point there's a $2 trillion company. So we have PE of 13.6, forward PE of 12.83, so they're looking to grow their earnings in the next year. PEG of 0.64, right? We said under 1 is good. 1 is fair. Under 1 is good. That's 0.64, so you're 2/3 or you're 1/3 off of the 1, which is amazing. And you can see not necessarily too um, like nothing stands out in a negative way except for the EPS quarter over quarter, which did fall 5.2%. You can see analyst recommendation 1.9, target price 333, and we're trading at 187, right? You got a large way to go. And of course, a whole bunch of EPS growth. So solid pick here. If you're not looking at Facebook right now, then you're doing something wrong, in my opinion. CAT not trading at a huge discount compared to others. You can see target price at 233. Although it is fairly undervalued comparing the PE ratio and the PEG, which analyzes the growth as well. You can see they pretty much exceed in that area. Micron Technology, another one that's single digit PE ratio, PEG of 0.49. Under 0.5 is hard to come by, and from what I've seen. And you can see some more earnings growth has been killing it. Ford is one I'll stay away from personally because they have been bailed out. So you can see this 0.5 is not necessarily true, or 0.05, and their cash is messed up because of the bailout. But that was a while ago, right? But you can see from 25 to 15 in a matter of in 2022, which is crazy. So it's a political stock at this point. I'm gonna stay away from it. I'd rather invest in a company that has zero political affiliation rather than 100%, right? And Ford is up there. KLA Corporation, they do semiconductors. I personally have not heard of them, but they are trading at a solid deal, 440 to 314. Solid metrics as well, and earnings are looking to grow. Corteva, I'm pretty sure they do chemicals, but you can see PEG not too low below 1. And something to note is the discount. Like, look at the discount from 380 to 180, right? That's a huge discount. That's 50% off. Cats from 240 to 200, not too much. Micron, 98 to 75, not too much. Ford, political, KLAC or KLA Corporation, 440 to 314, not too bad, right? That's around a quarter. Corteva, 0, right? It's at all-time highs. Same with Halliburton. PACCAR, I have looked at in the past. They do construction machinery type stuff. But you can see 96 to 83, not that big of a discount. Western Digital, huge discount from 75 down to 46. So we're almost at, it's down around 30%. But you can see earnings are growing, pretty low valuation, right? Look at that, 5 PE ratio, or 7.35 PE, 5.4 PE, 0.32 PEG. If you don't know what these mean, you could just go back to, overview and click on valuation, and it will tell you. Or you could click on this stuff, right? A ratio used to determine a stock's value while taking into account earnings growth, right? We just talked about that because this takes in to account the value based on the stock price and the EPS, and this takes in the growth of that EPS. So we're going to go through a couple more, just see if we know any companies on here. Energy or a huge discount. So not a huge discount, not a huge, I guess not too bad. Owens Corning, but these are getting to the smaller companies, right? $8 billion from 200 to 129. That's pretty good. RH is huge. I'm surprised that they're only a $7 billion company, but we've gone from 750 nearly to 330. So, oh my gosh, that is down 50%, just like Facebook, right? Down 9% today. We could look into them more. They're actually solid, and It's crazy how cheap they are. Um, but yeah, RH is another one to look into. Same with XPO Logistics. I've looked into them as well, 90 to 60, so down a third. Um, Medical instruments, trucking, I've looked into them, not too much considering the past. Under Armour, we can see from 27 to 13, that's a huge discount. Top Build, Core. Now we're getting to the smaller companies, but RH and XPO Logistics are huge. Harley Davidson, not too much. Skechers, maybe something to look into, but I know they've run up a lot in the past. Columbia Sportswear, so we're seeing a lot of companies like Columbia Sportswear, Under Armour, Skechers. It's like clothing and shoes, kind of weird. SeaWorld, stuff. You could have your own, obviously, criteria outside of this of what type of company you want to invest to, like chemicals, or do you want to do, um, vacation spots like SeaWorld. But yeah, we have Overstock at the end, which is the infamous stock that went from like $4 to now 50 back in COVID times. But yeah, so you have a bunch of ways to find stocks in this type of environment, right? We personally looked at literal 10 good ones, at least that you can know of, right? They're not hidden companies and they don't have too much political affiliation, right? We have Facebook, which is up there in political stuff. However, it's almost too big to fail, right? $500 billion, you use it every day on Facebook, Instagram, WhatsApp, and I'm sure everyone uses it as well. But stocks like Pacar, WDC, Western Digital, Micron is up there, RH, XPO Logistics, and then you could look into the sketchier stuff like Under Armour, Skechers, um, Harley Davidson, SeaWorld. That's the type of stuff where it's a smaller bet, smaller company. However, you can still make a solid return. So look into finviz.com/screener. Find out what criteria you want because it differs from person to person, right? You could have a dividend yield. I don't have a dividend yield on here. However, you can do that. You can do companies over 10 billion only, so it goes from 40 to 10. You could do, down. We could do month down, which should be almost all of them. Or you could do, near it's at its 52-week low. It'll get cut a little bit more. So we have 3 companies now, and you could cut it as little as possible, right? Because it's up to you. I just showed what it's up to me. This is what I would do, and we came out with 40 or so. Um, so I hope this gives you some ideas of some stocks to invest in because when the market tanks this much, not necessarily the market, but the stocks inside, right? We've seen the market not do too bad, right? We're still down 12 to 15%, but stocks like Facebook and what was the other one? RH down 50% within the last year. Like that's crazy, and they're solid companies. So look out for those types of companies because those are going to bounce back heavier than others. And I hope you pay attention, not financial advice, obviously, but just take into account what stocks you see here and maybe you rewatch this in a couple months and see what deals you could have gotten. So I hope this video helps you. If it did, please press the like button and subscribe for videos every Monday, Wednesday, and Friday on this channel and daily Instagram posts on our Instagram as well. Thanks for watching and good luck out there.